let's look at what is happening in terms of interest rate cycle in the US. So the Federal Reserve decided to maintain its benchmark interest rate after making 3 consecutive rate cuts in the last year. So this year, clearly, there is no change at all. So what happens in the US is, for example, in India, we look at inflation and we look at the liquidity, and based on that, we take the call. But when you look at Fed, they also look at unemployment as another parameters, and basis that they decide and take the stand. So they maintain the position of no changes. On the other side, what we are witnessing is the dollar index is inching up big time. And in the past, it was always observed that whenever there was a sudden spike in dollar index, we saw major outflow happening in the emerging markets.
Hello, my name is Vikas Agrawal and I am the founder of AIF and PMS Experts India. What we have observed is that there are more than 90% of the viewers in our YouTube channel who have watched our video and have been watching our video continuously at the regular intervals, but have not yet subscribed to our channel. So my submission to all of you is that please subscribe to our channel so that we can reach out to more individuals like you and spread the awareness about the whole investing game. Thank you so much.
Good evening, everyone. Welcome to our Market Outlook webinar. We are thrilled to have you with us today for an insightful session. I am Samir Kumar, Chief Business Officer at AIF PMS and Expert India Private Limited, and I will be your host for today's session. We are honored to have with us Mr. Vikas Agrawal, our founder and CEO of AIF PMS Expert India Private Limited, with 23 years of experience in the investment industry. Vikas has developed a deep understanding of market trend, portfolio management, and wealth strategies. He has been instrumental in helping investors navigate the complexities of financial universe. And today he will share his expert outlook on the market for 2025. विकास जी, मेरा आपसे एक अनुरोध है कि सेशन को आप मिक्स रखें, हिंदी और इंग्लिश, और इन्वेस्टर और जो भी लोग इसको ज्वाइन किए हैं, ये सेशन हमारा बहुत इंटरेक्टिव होने वाला है, तो आपके जो भी क्वेश्चन Q&A हैं, आप प्लीज चैट बॉक्स में पोस्ट करते जाइए. ओवर टू यू विकास जी.
Thank you, Samir ji, for helping us to organize this session. Well, we can see a lot of volatility in the markets, and markets have been in a doldrum, I would say. People are really concerned about, everybody wants to know what is going to happen, because every day when you see the market, it's going down, especially in the month of February. We see a lot of corrections happening. So what we'll do is, we are prepared, like every month, we share our house views on the markets. So we've done some homework. So if you allow me, I'll share the screen and share some of the data points which would help all our investors to navigate this market volatility. Welcome to the webinar. First of all, I would like to thank all the participants who have taken the time out from their busy schedule and listening to us. And also take this opportunity to thank all our viewers on the YouTube channel for giving us the patient hearing and appreciating all our efforts. So what we're going to do is, basically, let me just tell you that this is going to be our summary, the session, the agenda. Agenda is to give you perspective about US macros, what is happening in Indian economy, the macros and micros both. And then we'll come to equity markets, where we talk about fundamentals and also talk about behaviors. And we'll also try and look into the valuation indicators, what they have to say. We'll start with US. The Honorable President, Donald Trump has taken over. And after he has taken over, he started implementing the tariffs on various countries. So, when you look at the data, strategic tariffs, the 25% additional tariffs on import from Canada and Mexico. So these are the two countries which got affected the maximum. And on top of that, additional 10% on additional tariff on imports from China. So that clearly indicates that these countries got affected to a large extent. But let's look at the other side, that, what is the economic power, what is the kind of correlation these countries have with each other in terms of percentage. So when you look at the overall US, the GDP, the trade accounts for just 24%. So 76% is their in-house story. Whereas Canada, their GDP depends on the trades, which is about 67%. And for Mexico, it is 73%. So literally, they are completely dependent on this trade. So they are also going to put these tariffs on US. So it's not one way or the other, but clearly this indicates that US may not have too much of impact if these countries are going to put back the tariffs on them. Whereas the China is about 37% of the overall GDP, the trade, which I said initially is the dependency on the trade. Then we'll talk about the impact of this. So there are some economists and Goldman Sachs, the global investment research, as per their paper, they say that the China, because of this 10% additional duty, the tariff, China's GDP may come down by another 0.5% because of their dependency on US economy. Likewise, it will have other effects also. Let's look at what is happening in terms of interest rate cycle in the US. So the Federal Reserve decided to maintain its benchmark interest rate after making 3 consecutive rate cuts in the last year. So this year, clearly, there is no change at all. So what happens in the US is, for example, in India, we look at inflation and we look at the liquidity, and based on that, we take the call. But when you look at Fed, they also look at unemployment as another parameters, and basis that they decide and take the stand. So they maintain the position of no changes. On the other side, what we are witnessing is the dollar index is inching up big time. And in the past, it was always observed that whenever there was a sudden spike in dollar index, we saw major outflow happening in the emerging markets. And this time is not different. So because US, the way they are imposing these tariffs on other countries, so US trade policies, including tariff on imports, have made foreign goods more expensive. Please understand that it is even more expensive. And this somewhere will reduce the demand for foreign currency. And therefore, US dollar is strengthening. This is settling at about 106 now, but it went up to 107.5 also. So clearly it suggests that the dollar is becoming even more powerful. And when we talk about the interest rate cycles, let's look at some of the countries like US. As I said, there are no changes even after Donald Trump taking over. China, again, no changes. In fact, Japan, after a long time, we saw rather they had to increase their interest rate. When you look at the other part of the country, or I would say the rest of the world, all of them are in the verge of decreasing the interest rate. Clearly indicates that, when you look at data like UK, Eurozone, Canada, Germany, India has also reduced from 6.5 to 6.25% in the month of February. So there is a change in the interest rate movement. Now, another interesting data. Now, this is for the first time now, US, their debt surpasses by $36 trillion. So US एक ऐसी इकोनॉमी है जो जितनी बार उधारी लेती है, अगली बार उससे डबल आके उधारी लेती है. मेरा कहने का मतलब ये है कि you see, even during the previous presidency of Biden, we saw that the debt of US was at all-time high, and this is further increasing. So the total debt surpasses by $36 trillion, which is by far the highest across the globe. This is what some survey which indicates that some world predictions for 2025, what people were expecting. Some people were saying that we're going to see increase in the temperature because of the global meltdown happening. But then we did not see any major changes out there. Some people said that the prices will further increase faster than the incomes. There also we see a lot of neutral aspect, because when you looked at the previous data, you saw that interest rates, most of the countries are trying to reduce because inflation is under control. So that clearly indicates that prices have not really gone up to what extent what people were projecting. But this is another important statement, is that AI will replace many jobs in the country when this has already begun. AI is becoming more and more powerful, and many people live their lives in virtual worlds. This is not happening. People are traveling across the globe. There'll be a new global pandemic caused by new virus. So far, we've not heard anything about that. People in many countries will become more tolerant of each other. Well, this is not happening. They are mature enough to manage the situation. The war in Ukraine will end in 2025. Well, it was expected, but so the way the activities, again, the war situation. After seeing the situation, we do not see any major actions happening there. Investors have poured more money in the US equities after COVID, and they became more confident about US as an economy. And the household money of US is also gone to the extent of 58% in the US markets. So if US stock markets do not do well, which means that overall economy may not do well, because their exposure to equity in their equity market is at about 58%, which is highest across the globe. US has disproportionate shares in the global market cap. No denying on the fact that you have company like Apple, company like um, Google, and even the market cap. Yeah, you saw the market cap of the entire market, which is S&P 500, and also these companies. This clearly indicates that they have disproportionate. When you look at India, we have only 3.4% of the market share, even in terms of the market cap. Whereas, despite we are the fifth largest economy in the world. So clearly, US has disproportionate share in the global market cap. Let's look at some of the aspect of Indian macros. So from an India point of view, this time the budget which was prepared, it's like a Mahakumbh Triveni Sangam, where this government of India tried to focus on fiscal prudence and also looked at giving boost to the consumption and have a sort of a real balance between capital allocation. Now, if these three engines starts firing together, then you're going to see GDP bouncing back to the next level, and we're going to read that in 2000 in detail, each one of them. So basically, you have a situation where we are closer to 24,000 levels of Nifty. You have consumption story which is likely to pick up. The government of India is focusing on that. And then on the other side, you have geopolitical risk, which is increasing, and the earnings, which is likely to go up in the future. And you have Trump administration, where we want to see a lot of these duties and the tariff that they want to put. So 2025, a small snapshot about budgets. So the total receipt, other than the borrowing, and the total expenditure are expected to be at about 35 lakh crores and 50 lakh crores respectively. Well, by far this is not a small number. I remember, 7-8 years back, when we used to study these data points, we used to be almost 4 times lower than the current numbers, and this has gone to almost borrowing has gone up to 35 lakh crores, and the expenditure is about 50 lakh crores. The net tax receipts are estimated at about 28 lakh crores. The fiscal deficit is estimated to be 4.4% of the GDP. So this government says that we don't want to give too much or pass on too much of loans to the next generation, and therefore the fiscal deficit is likely to be maintained at 4.4%. If that is achieved, then I would say it's a remarkable achievement. The gross borrowing, market borrowings are estimated at about 14.82 lakh crores, And capex expenditure is about 11.21 lakh crores, and you have additional state level expenditure put together. It is coming to about 17 lakh crores, and your borrowing is about 14.82 lakh crores. It's almost 1:1, I would say. So they are basically borrowing the similar amount what they are spending. This government is clearly focused on agriculture, done a lot of activities in terms of increasing the productivity of the farmers. Focusing more on pulses, the self-sufficiency, the improvement in the self-productivity. Focus on SMEs. They are the future of India, trying to give them support in terms of providing them credit, access, loans, startup facilities, etc. Focus on investment, so infrastructure development, your road connectivity, your other innovation labs, and they have also realized one thing, that there is a gap in terms of skill development, and therefore they want to focus on skill building this year as well. On the other side, clear focus is on export promotion, trade infrastructure, and boosting the FDI money. Historical GDP bifurcation. So this is very important aspect, that when we talk about this time, government of India has given boost to consumption, as in they want money to be given in the hand of people, and therefore they are not charging any tax on income up to 12 lakh rupees, and for salaried income, which is 12.75 lakhs rupees. What do you mean by that? Now, this is the GDP bifurcation. This number clearly indicates that in India, the total GDP, 58% of the GDP component comes from private consumption. And giving 1 lakh crore of the rebate on taxation, on income tax, direct taxes, this money will not go in roti, kapda, and makan, because they are middle class families, and that needs have been fulfilled to large extent. So this either would go towards expenditure, traveling, etc., because people fulfill their I would say desires eventually. They may postpone, but they do so. Or maybe some amount of money will come in the form of SIPs or investments in direct. So when you know that 58%, so this 58%, they wanted to fire this engine, because somewhere they witnessed that the consumption requires some amount of boost. And then they given this, I was talking about, it's called Triveni Sangam. On the other side, the government consumption is about 10%. And you know that the investment, the capex targets this government has taken is about 11 lakh and 31,000. Mota moti 1 lakh crore almost a month. And then you have your investment, which is about 35%. And import and export, you see, is going to be, they are nullifying each other, in the sense that in the 2022 and 3, you had 24% export and 24% import. Not to forget that India is the largest country to import oils, and therefore our import bill is always high. So the total number is about $1,300 billion, and out of which you have $850 billion of imports, and only $350 billion of exports. So this is balancing out each other. You see, rather it is giving us the discrepancies in maybe 1.5%. So this government wants to focus more on export and reduce the import. So as I said, that the no tax for individuals up to 12 lakhs. So this will add to the private consumption, that which contributes 50% in the economy. Boost to private sector consumption. With more money in hand, middle class will spend more money in consumption. And impact on GDP, which is private consumption, is expected to increase, further propelling GDP growth. And investment may also see a slight boost due to increased savings and spending. So this is what the government of India wants to achieve. And 2025 directly targets the middle class consumers, and therefore they've given this tax relief clearly to boost the private consumption. And this increase in consumption will contribute positively to overall GDP growth. So so consumption is also one of the key drivers. The other interesting data, a lot of people are concerned about share markets, their valuations, and but let me tell you, the trend is reversing here. This number clearly indicates, your GST collection after a long period of time. This month, in the month of January, it was recorded at the nominal GDP growth of the country is at 9.7%. And in January, we recorded the GST collection, which is 12%, 12.3%, which is higher than the nominal GDP growth. Otherwise, you see, even in the month of July, which is July and August, they were at neutral, I would say, because that point of time, your nominal GDP growth was at about 10%, which further came down to 9.7, whereas the GDP, the GST collection was at 1.95 lakh crores. It is a record high numbers. I remember this was a dream of our honorable finance minister when we had implemented the GST number, and total collection used to be below 1 lakh crore, and she had the dream of doubling up in 5 years time to 2 lakh crore. So almost mota moti we are there. So this clearly indicates that the economy activities has begun. On the other side, kudos to our central bank that inflation numbers have also been controlled to a large extent. And what we saw in the last quarter, because of the food inflation, the number, the food inflation went up to 26%, came down to 11%, and your inflation rate came down to 4.31%. Now, the target for the RBI to keep the inflation is about 4%. So they are almost there where they want to be. 0.3% can be further reduced by inching up the liquidity in the market. So this is a great achievement that the inflation is in comfort zone now. And on the other side, the RBI has taken a couple of stands. One, you saw that the interest rate they have reduced by 0.25%, which is at 6.25% now. Repo rate reduction was lower down, repo rate by 25 beeps, as I said. And this clearly indicates that there is a reduction in the borrowing cost because of this. And the GDP forecast for RBI is to have 6.7% in 25-26, with an estimated growth of 6.4% the current fiscal year, following a 8.2% increase from the previous year. And the inflation forecast is also at about 4.5%. So it is very much in line with each other, and the data clearly indicates that they are 97% closer to what they are anticipating. Look at the Indian markets, couple of headlines here. Thanks to Kotak Mutual Fund, we picked up the data from there, and they have also in turn collected this data from various sources like Financial Express, DOI, FEDA, DBS. And also I take this opportunity to thank Motilal Oswal for sharing a couple of data points, what we were looking out for. So some headlines here: India's manufacturing PMI rise to 6 months high of 57% in January. This also clearly indicates that there is a pickup in demand. India's service PMI drops to over 2 years of low, which is about 56%. But it is expected that from April onwards, this will also increase. The auto sales up 6.6% in January. Dealers have now sort of mixed expectation in the coming months. India overtakes China to become second largest diamond market across the globe. India's gap to widen to 1.3% of GDP in FY26 on export headwinds from Trump's trade policy. This is what is expected. As in, if we want to have, say, maybe 10% tariff coming from US, then we want to have some amount of difficulties. India's crude oil import from Russia surged 13% in Jan despite latest US sanction on Russia. So this clearly indicates that the way government of India is managing the global policy is that They are not going by the emotions. They are absolutely looking at wherever they get the negotiator prices, they are picking up. In fact, there is a proposal from the US now to India that they also want to export oil to us. India's strong growth, stable macro makes it stand out. You see the World Economic Outlook, and this is the IMF data, which they are projecting. So they are expecting India to grow at 6.5% for next 2 years. So this clearly indicates that India continues to be the growth engine for the entire globe. Uh, because our even at 6.5% growth rate, we continues to be the highest amongst all the emerging and the developed economies. The other parameter to look at is in economy activities shows a growth pickups sustaining, and we saw in the month of January that the economy activities is increasing. The capitalization, the capacity utilization is likely to pick up in 25 during this financial year 25-26, and we saw some amount of action happening out there. So far, the monsoon has been very good for us this year. When you compare this with other last 5 years, that this year was fantastic for us. So maybe you'll see better results coming in. The rural demand, well, this is surprising. Uh, Quarter on quarter, the rural demand vis-a-vis urban demand is outpacing big time. Even when you look at uh, quarter four numbers, this is going on. It is expected that the rural demand will continue to grow at 7.6% vis-a-vis the urban demand, which is at 5.7%. Crude oil remain in control, $76 per barrel. And with the way now we are importing from Russia, we continue to see that this is going to be remain subdued for some time. India, I would say, is in the next capex upcycle. When you look at the gross fixed capital formation, this is one of the parameters to look at. Last time when we peaked out was 2007-8 times, which also known as bull run for Indian economy. And post that, we saw major ups and downs out there. But then when you look at last 5 years of data and next 5 years, clearly this gross fixed capital formation is inching up towards all-time high of 34-35%, which is a very good number. Funding acceleration shows rising capex from private corporate sector. When you look at, there's a perception in the market, Samirji, and the perception is that the private sector is not taking any capex, etc., etc. But when you look at the data, clear data, and this data comes from some of the large banks, and when you look at their approval based on the large projects which have been sanctioned by them, this data clearly indicates that this is also going up by 20% year on year for the last 5 years. So robust private capital, private capex outlook out here. The government capex on the other side is inching up. The government had the target of 11.11 lakh crores, and because of the major elections in the first half of the year, they could not spend this much money, and also we had witnessed some global headwinds, so they were playing little conscious. But we saw in the month of December and January, the government of India is bouncing back big time. All the projects which were on hold have already begun. Most of the projects were from Maharashtra and Haryana, and also now with the Delhi election win by BJP, you will see the capex targets are likely to be overachieved. The capex as percentage of budget estimate weak, but saw some improvement in December. I already talked about it. In the month of December, what they were running short of targets have already started overachieving it. because they want to cover up, at least they want to reach about 10 lakh crores vis-a-vis the projected number, which is 11 lakh and 11,000 crores of capex targets. Two-wheelers, three-wheelers, trucks well before the pre-COVID number. It is below, I agree, from the pre-COVID. But when you compare this with last year, in some of the places, what we are witnessing is a significant amount of improvement. Maybe the four-wheeler, when you look at, it is that last year it was 4.58 and this year it is 4.91. Likewise, other four-wheelers. Now, Ladli Behan Yojana, well, you know that whether you talk about BJP, Aam Aadmi Party, Congress, no matter which party they are, everybody is talking about introducing some of these schemes. As this point of time, the overall chunk is not significant, so therefore may not have too much of impact. But if this continues, then that becomes one of the worries for the stock market, because a maximum amount of money will outflow from here in these yojanas, Ladli Behan and Ladli Bhai yojanas, and as a result of that, you will see some amount of impact. But this data clearly indicates that, as you can see, that most of the state election, they play more important role than the national level Lok Sabha election. And BJP has been continuously working hard in terms of introspecting wherever they are going wrong and trying to improve upon those things based on the feedback. And this is helping them to increase their footprint pan India. This data, while the data looks very disappointing because FDI inflow has been negative in India so far this year, particularly when you look at from a straight line, it is declining. And I would say not because of that they don't want to come to India, because some of the companies, like for example Hyundai, they got listed and taken the money back to India, to their country. Now, because of that, this number looks negative. Otherwise, we did not see any major outflow as far as any Cat 1 or Cat 2 long-term money commitments coming to India for the development of India. This is the Lama research done by them, where it indicates that 50% of the people believe that India will continue to grow in 25 and 26 the way they have anticipated. So this also gives conviction to some foreigners sitting out there who are not deploying money in India. I hope they listen to this podcast and they come and invest with us. India, the infra spending, as I talked about, capital expenditure, which is about 10 lakh crores, and then you have grants in aids for creation of capital assets, which is 2,66,000. So this was 13 lakhs and 18,000. Whereas 25-26 is now 15 lakh and 48,000 crores, because your state level expenditure and the grants in aid for creation of the capital assets, both put together, is coming out to 4,27,000 crores. So a lot of people said that this government now wants to focus on consumption, and I also categorically mentioned that it's not about consumption, it is also about capital expenditure. So they have kept the target as it is, like 11 lakh and 31,000 crores, and 25-26 next year, the coming year, 4,27,000 crores. So total coming to 15 lakhs and 48,000 crores. So this is nothing but 17% growth in capital expenditure in India. So nobody can say that this government is moving the focus from capital-led economy, capital expenditure-led economy to consumption. No, it is about capital expenditure and also about consumption. 1.3% of tax buoyancy. So they felt that, the other thing of Triveni is your fiscal deficit targets, which is 4.4%. So they felt that this time they will have 1.3% tax buoyancy, assuming that the revenue will go up to 43.7 lakh crores gross tax revenue this year. And therefore, your nominal GDP will become 3 trillion and $3.56 trillion. And they will have 1.33% of thing to manage their fiscal deficit. If that also doesn't happen, for example, if we don't achieve the targeted numbers in terms of the total collection of the tax, then there are options that the government will focus on uh, disinvestment and maybe try to achieve their targets. Government is also focusing on fund of fund, which is given to venture capitalists through SIDBI. SIDBI is an organization run by Government of India, where they also invest in fund of funds. This time the money is the total mandate is given up to 10,000 crores. The small modular nuclear project. So small nuclear energy is something where Government of India wants to focus on and fulfill their some part of requirement of the energy through nuclear project, and therefore allocated 20,000 crores. If this works out, then probably from next year onwards, you see major amount of your energy requirements will be met by nuclear energy. Uh, Another 25,000 crores to maritime development fund. So what happens is that, Samiji, when we import and export, we spend about almost 45-50 billion dollar on logistics. So if we invest this money in having our own ship, then this 45 to 50 billion dollar of money can be saved. So this government wants to focus on that also, and therefore allocated about 25,000 crores and 20,000 crores to deep tech innovation. This is another very important area. Clearly focus more on broad connectivity in school. Therefore, the level of education goes up. Atal Tinkering Labs. So labs is for innovation and digitalization of curriculum. This is very important कि हमारी जो धरोहर है, हमारी जो सारे जो हमारी जो जितने भी लिखे हुए बुक्स हैं पुराने, वो उसको डिजिटलाइजेशन करने का प्लान है गवर्नमेंट. अगेन एज आई सेड, जो ये टैक्स रिबेट होगा, जिससे रोटी कपड़ा मकान से ये मूव होगा कंज्यूमर डिस्क्रिशनरी में, जिसमें ट्रैवल होगा, हेल्थ केयर होगा, एंटरटेनमेंट होगा. एंड बेसिकली बियॉन्ड बजट द गवर्नमेंट हैज टू थिंक दैट सबसे बड़ा रुपया, एंड रुपया इज टू इम्प्रूव द लिक्विडिटी इन्फ्यूजन, interest rate cut and focus on credit push. Now this is another area which is called Kalyug, Kalyug ka Abhimanyu. Well, Abhimanyu, when he entered in this net because he knew that he has to only fight with Kauravas and not Pandavas. But in today's entrepreneur, he has to fight with everybody. So the next bill which is likely to come, which is Jan Vishwas bill, this will cut down almost 180 compliance burdens on entrepreneurs. And in the second one, 2025, it will another reduce 100 compliance burdens. So this will give them a lot of ease of doing business, and our ranking of ease of doing business will also eventually go up. This is market cap and PAT, both are on the up move. We saw that we had about 275% of market cap growing in India after COVID, and your actual profit after tax, which is PAT, also grew about 327%. So when you look at this is not even 1:1. We talk about market cap to GDP at 1.35%, 135%, but we don't compare. When you look at last 4-5 years of data points, your PAT has grown at the rate of at the absolute number of 327%, and uske samne market has not grown to that percentage. So there is room for market to cover the market cap. This is the valuation of the Indian equity markets. When you look at historically, the large caps have traded to the tune of about 18.5 to 19 kapi. Mid caps at about 25, but current mid cap is about 30. Your large cap is about 19.9. This data is on 31st Jan, and this February we saw further corrections happening, and this is almost closer to the all-time low. Expected earnings is also going to be 1033, and FY26 going to be 177. Well, I keep hearing that a lot of people say that FIIs have been selling. Yes, I agree that FIIs have been, the FPI's numbers clearly indicates that they've been sellers in the markets. We saw the trend began in the month of September last year, 2024, and continues to be the negative. Except for December, they were positive, but otherwise January also they were negative. So they were negative by 8.4%. I mean, if I have to quantify in terms of numbers, then almost in the last 4 5 months they would have sold equities worth rupees 2 lakh crores, I would say. And uh, not two, sorry, 20 lakh crores, the total number. And that clearly indicates that, but then this number, I'll show you in the next slide. This is not from India alone. This is across the globe. And as I said, it was noticed in the history also that whenever your dollar becomes more powerful, the dollar index goes up, these FPIs tends to book their profits, loss, whatever, from the emerging market and move to developed economies. This is the MSCI index numbers. India has 18.1% weightage, while the China is showing 28%, but China data is not available from October onwards last year. So we are not sure about, because they are not disclosing the data only. So we're not sure that what would be the percentage of that. But this number clearly indicates that FPIs have been selling across the emerging markets, and India is not the only country. Let's look at, but on the other side, let's look at FPIs outflow are larger but not substantial. This is the data of last 15 years. We saw 2008 global financial crisis where FII's outflow was in the tune of $15 billion. And outflow as percentage of average market cap was minus 1.5%. And from the peak, the market fell down by 66%. So this was the highest ever. And post that, in 12 months' time, the market recovered by 127%. Then we saw yuan happening 2015. Then we saw Fed hikes in 2016. Then we saw a slowdown happening in 16. Then we had COVID in 2020. Then we had geopolitical worries in 2021. And the current fall. But when you look at the FIIs, their total outflow, then it says that this time it is about $20 billion. I just told you. So almost 181, 18 lakh crores almost. Yeah, around 18 lakh. So I was right on that. So almost $20 billion. And this data clearly indicates that, while this time it is only down by 12% from its peak, but very likely that once this issue gets over, let's see what would be the percentage of bounce back. This is another data. DIIs mostly flow into equities, continue to be robust. DIIs is this data, thanks to Motilal Oswal for sharing this data. So DIIs have been infusing equities. This clearly indicates that we as an economy have become more mature, because when you look at the last slide of the data, if you would have had $20 billion going in 2008, and at 15%, you had 66% of fall. Assuming that this would have been $20 billion, then your market would have gone down by at least 80%. But this time, when they have taken out $20 billion, your markets are down by only 12%. This is, I'm talking about the benchmark, not going stock specifically. Now, this clearly indicates that our markets have become more mature and do not react to the markets, A, because of the maturity shown by the existing investors, B, the new investors who are coming in the stock markets, and also the overall allocation coming from large institutions like insurance companies and mutual fund companies and their confidence to Indian equity markets. And if market further falls, then you have active management funds sitting on almost 1,60,000 crores of cash. They're waiting for markets to sort of settle down, and this money, which is 5% of the overall equity mutual fund markets, this money is likely to hit equity markets. So put together, which is balanced advantage fund, and this put together, we are sitting on 2,75,000 crores. This is much. This is more than enough to kind of manage the downturn. Then we already talked about it, that our market share of India is going down from the global market share. But when you look at India's valuation premium over other emerging market is below 5 years of average. So this was 72%. Because of this correction, it has come down to now 48%. FPI's holding in Indian equity is at decadal low. So history suggests that these FPIs, at a peak, they had about 21% market cap of ours, and say that it's like Eastern Indian company coming to India and taking over the ownership in the business, which we don't want. During our independence, they did the same thing. And the same thing was happening this time again when they were buying, and at one point of time they were having an ownership of 21% of our markets. But average, if you look at the decade or so, this was at about 18%. Now this has come down to 16%. And out of 16%, you have about 10-11%, which is your pension funds, long-term funds, which is here to stay. So the maximum float which is left out for FPIs to go out is only to the tune of 1 to 2%. They don't have much to sell now. Whereas on the other side, you saw that the Indian market, the DII's inflow have been going up, and we are proud to say that we are proud Indians who have increased their ownership in the stock market, Indian stock market. So this is, I think, in a way, blessings in disguise for us. This is couple of stocks. When you look at, there were 226 stocks, which has grown from 100% to 500%. From January 20 to 25, as on January end. There were few stocks which has grown 1,000%. There were about 23 stocks from BSE, and many stocks are trading at expensive valuations also. Some of them are trading at a higher P of 50 to 75, 75 to 100. This clearly indicates that one has to be very careful while choosing the stocks. This is the data analyzed returns. This is an interesting chart. This indicates that we as an investor will have to kind of narrow down our expectations, because look at the data of small cap. Between 2005 to 2020, almost 15 years, small caps have delivered only 7.5%. And from 20 to 25, delivered 22.8%. This is, I'm talking about Nifty small cap 100 index. Now, assuming that, and well, this number is not sustainable, by the way. So as we move ahead, there will be some consolidation, and it is expected that when you look at from 2005 to now, which is 2025, almost 20 years of data, then your small cap average returns have been in the tune of 11.5%. So I would say that one should have realistic expectation from the markets, and not to think that markets like mid caps have delivered 25% in these 5 years, so it will continue to deliver 25%. Now, my last slide, perhaps, when you look at markets, when they starts going down, the average number of days is about 88 days. There are times when markets were going down, 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 and 188 days it delivered minus 15%. Uh, then you had 2016 time where 109 days were negative and market delivered 11% negative returns. On an average, it is about 88 days. But this time, when you look at September, it started all this whole markets going down started from September onwards, September 24, if you remember. And it's been about 127 days, and we are still going down, down, and down, even in February today as we speak. Today is 18th of February. So, question is that this clearly indicates that, post March, as the economy starts doing well, as the nominal GDP starts improving, as the GST collection already started improving, as the liquidity started inching up, as the economy activity started improving, as the government's expenditure started increasing and achieving their targets, as the consumption story will begin from April onwards, as the taxation rates will start going down, people will have more money to spend, then you want to see the reversal happening. And that these are the 5-6 statements, and the numbers which gives me more conviction that the markets will likely to start doing better from next year onwards. This we've already covered, the Nifty EPX growth. We also talked about this. Also, we've talked about that almost 77,000 crores of assets have been redeemed in the month of January, and last quarter it was about 88,000 crores. So clearly, 90,000 crores have been withdrawn from the market by FPIs. We already talked about these inflow and outflow valuations. We covered up. Market cap to GDP is not relevant, I would say, while it has come down from 147 to 132%. But still, I would say that this is not the right parameter to look at. This is the market mood. Your fundamentals have shown improvement. Valuations have been corrected. The sentiments are negative, and this is the time to get into markets. As they say, you have to be fearful when others are greedy, and you have to be greedy when others are fearful. So this is the time when you have to enter into markets and accumulate as much as you can. With that, I take this opportunity to thank all of you for giving me the patient hearing. And Samir ji, I'm happy to take questions.
मेरे पास 2 क्वेश्चन आए हैं कस्टमर के एंड से। पहला क्वेश्चन ये है विकास जी कि कस्टमर पूछ रहे हैं कि अभी जो उनका करंट इन्वेस्टमेंट है, जो पोर्टफोलियो है, वो 10 to 15% डाउन है इस मार्केट सिनेरियो में। उनको क्या करना चाहिए इस वक्त?
ठीक है, जैसा मैंने बोला समीर जी की मार्केट्स तो क्यों डाउन है, मैंने उसके आपको रीजन बताया कि पहले इकोनॉमी स्लो डाउन हुआ, और उसके बाद में ग्लोबल हेडविंड आई, और उसके बाद में जीडीपी के नंबर कम होने लगे, और उसके बाद में स्लो डाउन का इफेक्ट दिखने लगा। तो ये एक प्रोसेस है जिससे गुजरा है। अभी क्या क्या हम लोगों ने इकोनॉमिक मेजरमेंट्स लिए हैं जिससे ये आगे इम्प्रूव होगा, हमने उसके बारे में भी बात की। तो अभी देखिए, शेयर मार्केट के स्वभाव में उतारो चढ़ाव, और मैं बोलता हूँ कि इंडियन इन्वेस्टर्स ने काफी मेच्योरिटी दिखाई है, जो पिछले 10 से 15 साल से म्यूचुअल फंड्स के थ्रू, AIF के थ्रू, PMS के थ्रू जिन्होंने वेल्थ क्रिएट किया है। तो मेरा कहना है कि अगर 15 से 20% डाउन है तो आपको रिएक्ट करने की जरूरत नहीं है, ये मार्केट के स्वभाव में है। मैं ये बोलूंगा इस समय पे थोड़ा पेशेंस दिखाइए, आप अपने गोल को रिविजिट करिए। अगर 3 साल 5 साल का भी इन्वेस्टमेंट है तो स्टे करिए उसमें, और अगर आपके पास में कोई लिक्विडिटी होती है तो मैं सजेस्ट करूंगा कि आप उसे फर्दर लिक्विडिटी पोर करके एवरेज आउट करिए, अगर आप कर सकते हैं तो, अगर आपका इक्विटी एलोकेशन बढ़ा हुआ नहीं है तो। ओवर टू यू समीर जी।
दूसरा क्वेश्चन ये है विकास जी कि अगर कोई इन्वेस्टर नया फंड इन्वेस्ट करना चाहता है तो क्या ये राइट समय है उनके इन्वेस्टमेंट के लिए या उनको रुकना चाहिए थोड़ा?
बिल्कुल बिल्कुल राइट समय। मैंने आपको पिछले 10 15 20 साल का डेटा दिखाया जिसमें ये क्लियरली इंडिकेट कर रहा है कि अगर अभी नहीं खरीदेंगे तो कब खरीदेंगे। लेट मी पुट इट दिस वे, फरवरी में, अभी तक के मैंने आपको जनवरी एंड का डेटा दिखाया था, फरवरी में पिछले 9 सेशन से हम देख रहे हैं लगातार मार्केट नीचे आ रहा है और सारे जो पैरामीटर्स है वो पूरे मीट होते हैं कि वैल्यूएशन पॉइंट ऑफ व्यू से मार्केट्स आर ट्रेडिंग एट अ फेयर वैल्यूएशंस। देखिए 3 जोन होते हैं मार्केट, एक होता है एक्सपेंसिव, दूसरा होता है न्यूट्रल, तीसरा होता है अट्रैक्टिव। तो अभी मार्केट जो है ना वो न्यूट्रल से अट्रैक्टिव जोन पे जा रहा है और उसमें अगर सेलेक्टिवली आप देखते हैं तो काफी रूम है जहाँ पे काफी अच्छा करेक्शन हुआ है, जो आप किसी पोर्टफोलियो मैनेजमेंट मैनेजर्स के थ्रू आप उस स्कीम्स में पार्टिसिपेट करके और आप अपना वेल्थ क्रिएट कर सकते हैं। देखिए ये बहुत बोलना आसान है कि बाई लो एंड सेल हाई, ये होता नहीं है समीर जी प्रैक्टिकली, बट ये इस तरह की अपॉर्चुनिटी मिली है अभी। आपको नेक्स्ट डिकेडल का ग्रोथ पता है इंडिया का, मैं बोलता हूँ इससे बढ़िया सर्टेन टाइम और क्या मिलेगा। ये जो अनसर्टेनिटी रहेंगी ये तो हमेशा रहेंगी। मार्केट्स विल नेवर से दैट लुक आई हैव बिकम कंप्लीट स्टेबल नाउ। ये तो आप इसी का ही तो प्रीमियम का रिस्क से आप अपने रिटर्न्स बढ़ा सकते हैं, जो रिस्क मार्केट में अवेलेबल है। तो अगले, जैसा कि हमारे ऑनरेबल प्राइम मिनिस्टर ने डॉक्यूमेंट किया 2047 को विकसित भारत की एक सोच रखी है और उस सोच में अगर एक छोटे छोटे कदम जो बढ़ाए जा रहे हैं एज एन इकोनॉमी, अगर अभी नहीं इन्वेस्ट करेंगे तो कब करेंगे, मेरा एक क्वेश्चन है। इसको मैं क्वेश्चन को पलट देता हूँ समीर जी आपके लिए। हाँ, अगर आप शॉर्ट टर्म के लिए डाल रहे हैं 1 साल के लिए तो मेरे लिए कहना बहुत मुश्किल होगा, बट अगर आप 3 साल 5 साल 7 साल के व्यू से आ रहे हैं तो इससे बढ़िया मौका नहीं है मार्केट में एंटर करने।
विकास जी, ये तो सच है कि वी कांट टाइम द मार्केट, तो राइट स्ट्रेटजी तो वही होगा कि आप इन्वेस्ट करते चलिए इफ यू बिलीव इन लॉन्ग टर्म ग्रोथ स्टोरी। तो विद दैट थैंक यू वेरी मच विकास जी, वंस अगेन थैंक यू वेरी मच। आपने आज जो मार्केट आउटलुक के बारे में हमें बताया है, मार्केट के बारे में बताया है, मैं उम्मीद करता हूं कि मेरे सारे इन्वेस्टर जो भी हमें देख रहे हैं और देखेंगे उनको काफी सारे उनके प्रश्नों का उत्तर इससे मिलेगा। थैंक यू वेरी मच।
थैंक यू समीर।